Hi guys, I'm Karunya Rao and on Ideas for Profit, we tell you why you should add NOCIL to your portfolio after the recent consolidation in the broader markets. In the last few weeks, there's been a capitulation in domestic mid and small cap space on account of a variety of reasons ranging from taper talks, fund rotation to large cap space and also the rise of COVID cases in various parts of the country. At MC Pro, we believe that the supernormal stock rally witnessed since March 2020 may not extend with the same growth rate. And of course, that's the nature essentially of the stock market. Early phase of the stock market rally, which is coming out of recession or pandemic woes, generally witnesses sharp re-rating. And a phase after this is qualified and differentiated by earnings growth. We've reached a phase where investors need to be more selective on the stocks they bet on, and the current consolidation offers that opportunity. And NOCIL, of course, is one such stock to look at, which has corrected by 16% from its recent highs. In the quarter gone by, the company reported a 7% sequential revenue growth on account of higher realizations. If you look at volumes, however, they saw a degrowth of 13%, primarily because of COVID-related restrictions, shutdowns for domestic end clients. Having said that, export volumes have seen a good pickup. On the exports front, inquiries from new customers have increased as many clients want to contain the China supply chain risk. Over the time, the management is confident of business inquiries getting translated into commercial opportunities for which it has enough capacity bandwidth. In the next 3 to 4 years, NOCIL expects the proportion of exports to inch up to at least 40% from the current 35 levels when it comes to the overall contribution to top line. Last year, the company commissioned the last phase of its mega capex project, raising its total capacity to 1.1 lakh tons. Taking account of the current utilization levels, this is a spare of around 40,000 tons. The management has reiterated that it would be able to reach peak utilization of new capacity by the end of first half of FY24. This by itself implies that at least 10% volume growth per annum for the next 3 years. While the management has not given any specific guidance for FY22 because of the fluid situation due to the pandemic, the medium-term trend appears quite intact. The vehicle scrappage policy is also going to help operating performance of tyre manufacturers. As tyre imports are under the restrictive list, domestic tyre makers and the domestic industry overall is expected to be in a better place to increase production in the coming quarters, and this should lead to a higher domestic demand for rubber chemicals. If you look at near-term risks, something to watch out for will be sharper production cuts by automobile manufacturers due to chip shortage and a high-cost inventory of raw materials which is likely to be absorbed in Q2 FY22. Overall, we're positive on NOCIL, which is trading at almost 14 times its EV EBITDA for FY23 projected earnings, as the base scenario is one of improved global demand in the medium to long term, and the company is well positioned to capitalize on it with its spare capacity and strong balance sheet. Any faster execution of the China Plus One opportunity will be a trigger for re-rating for the stock, and with the end of the capex cycle, prospects of free cash flows have also improved.